Hey, traders, how you doing? This is Dr. Gregory McLeod from Elite Traders University and My Market Heat Map, and it's another edition of Bulls versus Bears, the weekly Forex forecast. And it's so good to be with you on this wonderful Sunday. We're starting our week with March 19th, 2023. We're going to be looking at the news, which causes the markets to move. Okay, we're going to look at the Forex pairs. We're going to look at some commodities. We're going to look at the indices, and we're going to put it all together in a very easy to understand trading picture that you can follow. Okay, so before we get started, let's go ahead and I'm going to share with you what I use as my primary tool for using the markets, or actually engaging the markets and the activity in the markets. To know what's going on, I use My Market Heat Map, which is the arrangement of currency pairs by percentage change. It tells you what's popping, what's dropping, and what's not in the market. And you should be able to see it right now. And you can get it for 50% off. And it's a wonderful scanner. It's just regularly $99.97 a month. Now it's $49.97 a month. And I'll show you how powerful it is. I'm actually going to log in. It basically scans the market and it looks for those currencies and stocks and commodities and crypto, which are actually trending up. Green is trending up, red is trending down. It tells you what's hopping, what's popping, what's dropping, and what's not in the market. So let's get right to it. We're gonna dive in. Right now it's Asia session, so it's very low volatility. Nothing's really moving, so it's all gray. You stay away from gray. But when the market is actually more active, as we get deeper into Asia, maybe closer to the London Open, you're going to find that these currency pairs will start lighting up and they'll start moving based on the strength of the move. We can use that strength to our advantage because we can trade only those currencies which are strong and sell those that are weak. Okay, so pretty simple. But that's not the tool we're going to be using right now. We're actually going to be using something that I think is very overlooked and very, very important for traders. And it's really what drives the markets. The fundamentals and the economic news drives the currencies like a big wind that drives a sailboat. It creates the volatility. It creates the interest. And so when we have that wind blowing, that's great. Our boats can move. The little currency pairs are like sails that blow along the lake. However, if you have too strong a news, such as a central bank interest rate announcement or non-farm payroll, then that wind turns into a hurricane and can be very dangerous to trade if you don't have some of the tools that we have in our mentorship. Namely, we have the predictive function, and the predictive function allows us to get in the market 5 to 10 bars earlier than anyone else. Allows us to take advantage of big market moving moves before they even happen. Okay, but that's not what we're going to be talking about right now. We're going to talk about the wind, the economic announcement. So we can go right to our My Market Heat Map, and we have a whole bunch of trading tools. We have charts and quotes, an economic calendar, Forex TV, financial news stream, market hours, technical analyzer, a sentiment, currency correlations, national holidays. It's like a Swiss Army knife for any trader. In fact, when I worked at the brokerage, we had something called a Bloomberg terminal. A Bloomberg terminal is a piece of technology with 2 screens, and it has proprietary news and data gathered by Mr. Bloomberg himself. Right now, so to subscribe to something like that wasn't free. It was something like $26,000 a year for our brokerage to have that. And in fact, it's roughly like maybe $2,500, $2,700 a month to have access. And you had tools similar to this. So I decided when I left the brokerage, I would create my own and then have something that people could actually afford and actually use, so they can have the same quality of data coming to them as Bloomberg at a lower price. So that's why I create My Market Heat Map. And that's what my students use in their trading. So I go to the economic calendar and click that, and that will give us an overview of all of the currency pairs, of different news items that are going to affect certain currency pairs. So I look at this week, starting the 19th. I also only look at the high impact items. So I'm going to look at the high impact items. I'm just going to change that from medium to high. And that way I'm going to look at certain things. Sunday, we have the People's Bank of China rate decision. That is going to happen at 9:15. So in about a half hour, we're going to have that. And you say, well, Greg, we don't even trade the Chinese renminbi, or yuan as it's called. But we do trade the Australian dollar and New Zealand dollar. And those two currencies and the respective countries, China is their largest trading partner. So when you have certain news in China, it will impact Australia and New Zealand. In fact, when the Chinese economy catches a cold, Australia and New Zealand is said to catch pneumonia, right? Because it's the big neighbor that has a lot of influence over the economy. So we're going to look for that. In fact, if we are still on the air when we are looking at that, we'll actually look for a trade maybe. On Monday, March 20th, we have actually the RBA meeting minutes. And the RBA stands for Reserve Bank of Australia. This is the Australian Central Bank. The Australian Central Bank has had a rate announcement. They raised interest rates. But we look at the meeting minutes are really the notes taken during the meeting. And those notes will tell us how hawkish, or whether the bank might continue to raise interest rates, or the rate, the speed, and the frequency of those rates. Are they going to become more intense, or are they going to slow down? The meeting minutes will give us a view of what to expect next. And the market trades on future, what's going on, what could happen in the future, right? So we want to take a look at those. And we're not going to read the minutes. It's probably a pile of really boring paper. But as they read those minutes out loud and they start in a news conference, the currency is going to react, and we will look to see how we can trade that. That's going to be at 8:30 p.m. Eastern time on Monday, March 20th. Now we have a lot of news out of Canada, our neighbor to the north. And our neighbor to the north, we have retail sales month on month. MOM stands for month on month, not mom. And retail sales, most countries, Western developed countries, 70 to 80% of their GDP comes from retail sales, from consumerism, from buying. And so the more retail sales we have, usually it's good for the economy. It shows that the Canadian dollars in demand is being circulated, and it could be looked at as favorable for the Canadian dollar. Okay. Then we're going to have the CPI, or Consumer Price Index. Remember, I told you about the index. It might as well replace the I, or CPI, change the I from index to inflation. So really, we're looking at inflation. And we're looking at the possible inflation numbers increasing. Inflation's been affecting. You see the price of eggs in the United States, as well as gasoline and other commodities, have been going up in price due to a number of factors: supply disruptions and bird flu and everything else, right? So it's not just a U.S. problem; it's a global problem of inflation that's even impacting Canada. If we see inflation out of control or running really hot, we say running hot. Running hot is when inflation is going high. You might hear that in a financial news broadcast. I'll say inflation is running hot. It means that it's going up too high, right? If it's hot, then we would see possibly an increase in the Canadian dollar, because it would prompt maybe the Bank of Canada to raise rates even more in order to fight inflation. The biggest tool that in the tool chest of central banks to fight inflation is constraining, reducing the amount of money in circulation by raising interest rates, which really pushes prices even higher, and causes many companies to go out of business and people get laid off, creates a recession, and recessions usually lead to lower prices because there's no one having any jobs to have any money to buy anything, right? So I know that's a simplistic way. I'm sure the economists have a more complicated bunch of formulas and mathematics to show, well, no, it's not that simple, Greg. Yes, it is. When such and such has a pink slip and he can't buy anything for his kids, well, guess what? That's inflation going in reverse. Because you get enough of those people together and no one's able to buy these $9 eggs and $5 gas, then the prices have to come down. It's supply and demand, real simple. Okay. Anyway, off my soapbox. That's why I recommend you guys, you look into your, I would tell people about learning how to trade currencies, learning how getting another stream of income, and they would thumb their nose at me. I have a good paying job and I work for XYZ firm and I'm a vice president. And I have a 401k and I have health insurance. And now they're looking for a job and they're saying, hey, Greg, can you teach me how to trade? It's like, what happened, So if you still have your job now and inflation gets worse and more companies are shutting down, shouldn't you have another plan of action? And that's why you should click the link below and take our free masterclass to see if trading currencies is right for you, okay? And how you can work with me, talk to a member of my team, and we'll see, see if it's the right fit for you. And and we're picky about who we let into the program. We have a special program going on right now where you can get access to a 6-figure account, even if you have zero in the bank, and the education and knowledge, a 3-step process to grow that account, even with just a 640 credit score, and you get access to that at no risk to you. So if you want to find out more about that program, click the link below. Okay, let's go ahead and continue. So Wednesday, guess what? It's US dollar day. We have the FOMC economic projections, which is high. Fed's monetary policy statement, Fed interest rate decision, and we have the FOMC press conference that follows the rate decision to explain why they're raising or lowering rates, or the speed that they're raising or lowering as well. And so that's going to be big Fed day, March 22nd. And it's very interesting because this is the last meeting for a while. And so if this is kind of like a one and done until the next meeting, we could see a really, really big rally in the U.S. stock market, and also rally in the risk risk appetite currencies like the Australian dollar, pound dollar, euro dollar, and those other currencies that basically a dollar sell-off. So we could see that this could be pretty powerful. That's what I'm forecasting. That you're hearing it first here, and so make sure you make a note of that. I'm looking for the dollar to sink, because there's a cyclical pattern that has been going for about 72 years. And if you don't have mentorship, you don't have anyone that's been around that long. I've been around 72 years, but it's my profession, working for a brokerage, working in a bank, to know these things, right? And your average YouTuber does not know it unless they've had my class or been in mentorship with me, okay? And those cycles are very powerful patterns, and we're in a very powerful bullish pattern right now. So anyway, let's moving right along. Thursday, March 23rd, 2023, we have the Swiss National Bank rate decision coming up. And, they've had negative interest rates for a really long time. They may be, upping it for forecasts, they might move it up to 1%. Swiss franc, not one of my favorite currencies. They burnt a lot of people back in 2015 or so, where they depegged the Swiss franc to the euro. They decoupled and caused a fantastic appreciation in the Swiss franc, which took all the central banks off guard, wiped out a lot of wealth, and got a lot of people mad at the Swiss. So I would be very careful with the Swiss franc. So even though we don't see that flag very often, and but I would look at the pound though. The pound is going to be in play on Thursday, and it's going to be the Bank of England on the spotlight, baby. London calling, the Bank of England asset purchase facility, the Bank of England interest rate decision, the monetary summary, and the Bank of England minutes. They're going to come at one after the other at 8 a.m. Eastern time, Thursday, March 23rd. The pound will be in play, and it's probably going to go sky high. So you want to hold on, look for that pound dollar, and ride it. I'm already looking at the news, and I'm already seeing what's going to happen next. And you say, well, hey, Greg, you're making these conjectures. You haven't even shown a chart yet. Yeah, it's like when you got a seasonal pattern that's 72 years old, it's like, yeah, okay. Gross domestic product, GDP out of the U.S. and annualized, that's going to come out at 8:30. GDP used to be a really, really big announcement back in the day. And so even if we might see a very strong GDP, but usually good economic news for the U.S. economy is usually bad for the U.S. dollar. That's just how it, we might be switching back into that. And then Friday, we're going to continue with more UK news, UK retail sales at 3 a.m. month on month. And then you have manufacturing PMI at 4:30. Oh my goodness, this is some fantastic stuff, guys. I mean, if you don't make any money next week based on what's going on here, you really, really, really need Elite Traders University. You need the McLeod trading method to show you how that we can look at this stuff and see there's money in it. And you probably say a bunch of flags and some initials and some percentages. You don't see, what's actually going on. But if you see what I see, do you see what I see? Then you see that this is going to be a very powerful, powerful trading week. Then March 24th, 2023. And that'll be just the 8 days before the Las Vegas Forex Mastermind. That mastermind, we're going to be mastering your mind, a trader's mind. I'm going to be trading live for 4 days with my fellow students and people from around the world. We're also going to be doing training as well. We also going to be videoing the new course there as well. It's going to be fun. There's going to be food. There's going to be Top Golf. There's going to be a Brazilian steakhouse. There's going to be all kinds of games and competitions and contests and yoga and stretching. And we're going to be at a mansion in Vegas that's like 8 bedrooms and 6 baths, just in a completely different environment with other fellow traders. You really need to be there. You don't want to miss it. You don't want to be the person watching the video going, well, I wish I were there. You can't be there. Just click the link. We even have financing options available. If you're interested in coming to Vegas, meeting me, shaking my hand, give me a high five, and then learning what I've been accumulating for over 30 years, that's just waiting for you to take advantage of it so you can change your life, change your trading, change your life, and master your mind at the Las Vegas Forex Trading Mastermind. Okay. Anyway, durable goods and GDP coming out. Durable goods and transportation. Cars and trucks, that's transportation. And that is volatile. It moves up and down. So sometimes they look at durable goods orders without transportation, without airplanes, without trucks, without cars. And durable goods, anything that lasts over 5 years, like a dishwasher or a refrigerator, appliances, those kinds of things. And so durable goods orders, since they take so long to make, they means that there's jobs surrounding them. I mean, a lot of this stuff is manufactured by robots now, but if it was, it was a sign that the economy was growing because it takes so long to build a refrigerator or tractor or car or something, that these jobs would be, would mean that these jobs would last longer because these jobs were bigger, right? So we'll see how that actually looks. Probably a really good number. And if it does, we could see, again, more dollar, people will cycle out of bonds, out of safety, and moving into higher risk assets and other things too. And so let's go ahead and move right to the charts. And we're going to start with the US dollar index. That's in the economic look of the market. Remember, my market heat map, is your best place to come to learn about economics. We're going to write to our charts. We're going to actually go to TradingView charts, and we're actually going to start with the dollar index, the DXY. I always start with the dollar index because once you understand how to trade the dollar index, then you understand 7 currencies, that have the dollar in them: pound versus the dollar, Australian dollar versus the US dollar, the euro versus the dollar. So once you have all these lined up, then you have dollar yen and dollar CAD, dollar Swiss. So you understand that the dollar makes up what they call the majors. So if you know where the dollar is going, you know where all those other currencies are going. If the dollar is going up, then currencies like Aussie dollar, pound dollar, the ones with your currency in the front, well, guess what? Those will go down. And those in the back, when we have dollar CAD or dollar Swiss, well, those will go up when the dollar is going up. But here, what we can look at a couple of things. So we're bouncing off this 50% retracement on the US dollar on the monthly chart. But we have a harami, which is a bearish, a monthly harami. We have bullish candle that popped up there at the 50% retracement. If we take the low from 88.54 or so, and then we went back up to the high around the 115 area. Well, what happened was that the price bounced, pulled back for a correction at the 50%, bounced hard, and a lot of people assumed or forecasted price was going to hit back to the old high, but we needed to see a break of the old high here about 105.58. We didn't. We wicked it and pulled back, and that's rejection. We have a rejection, rejected, like slapped down, right? So with a smackdown, we have a harami. Harami means a pregnant pattern, and it's a mommy with a baby in front, right? This is a baby bear, not a baby bull, right? I know this is a monthly candle, so we have to wait till the end of the month for this to close. But if it closes below 103, 103 some change, 103.31, then this could be an evening star pattern, and we can see price actually drop down, maybe down to the 98.54 area, or even lower, right? So there's a fight going on here. And I think the FOMC announcement is going to hold the key to whether we start pushing down some more, right? So that's the monthly, but walking down the weekly, and you can see that we rally very strongly, hit this 105.15 area, resistance, price is turning down, and this looks like we've basically changed trend right now. We have a lower high, a lower low, we have a high, a low, and a lower high. Now, the bears are going to try to push price down below this 101.03 area. If they do, then they've established a new low, and they will have established a new downtrend. Okay? Has not happened yet. We haven't broken that area. Lots of candle action is telling us, hey, this is like over for the dollar bulls. However, anything can happen, and if we get a break above 106.02, then we could get that move back up to 114 or 115 and some change, right? 115.02 or so. So this is the indecision point. And anytime we have a triangle pattern, this is our classic triangle pattern. Triangle means like a question mark in the markets. Like, are you going up or are you going down? Question mark. Well, this is the am I going up or this is the question mark. We don't know. And we have a descending trend line and a rising trend line, and where they meet, we have demand and we have supply and demand. We have overhead supply, and we have you can make this green to show that it's demand, right? And where they meet, this is where they form the pattern, and the breakout from this point is going to tell us where the dollar goes for the next 30, 60 days, 90 days. Okay, walk it down to a daily, and you can see that it's we have some lower highs here, and we've got some we can actually tighten this trend line up a little bit along these lows, and so no, looks like that we have a high, maybe even a bearish head and shoulders in there too, right? And we need to get back above 105.91. Try even capture. If we can capture 105.30, it would be good news for the dollar bulls. But it doesn't look like that. Drop on down to the 4-hour chart, just walk it down, and you can see that it looks pretty bearish with lower highs and lower lows. We have a bearish head and shoulders pattern there that is it's a little ugly. I can start here, right? I can maybe like shoulder, head, shoulder. Okay, not real symmetrical, but there we go, right? And we get in a downtrend, which could break. We could fill all this down here and come down to the 182 area. Okay. So anyway, bulls versus bears, dollar index. We are bearish the dollar index. Moving right along, we have news coming up out of Australia and China. So let's take a look at the ADUSD, and you can see this is setting up very nicely, but we're actually don't want to get ahead of ourselves. We want to go ahead and move our drawings. I need to clean up my act. Clean up my drawings. There you go. Clean up my drawings, and here we are. Boom, 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 boom. Okay. We are bearish. We had this, we're below the 200. Greg, we're below the 200. We have lower highs and lower lows. We have a lower low. We have a lower high. But we haven't been able to break 55.18, which was the low we had back, the pandemic low back in March. Can you imagine? It was pandemic 2 years ago, and we are 3 years north of that. But we have not been able to break that, right? We have like an inverted head and shoulders going on here, where this is a pretty bullish pattern, and we can see a possible break north that could go on for a little bit, right? Basically, we have these lower lows, but we haven't broken. The bears have not been able to take this low out. The bulls have not been able to take this high out, right? So it's a little bit of a battle, a seesaw battle between the two. However, what we do have though is higher lows, low. These are all higher than the other, and we could break a trend line. We'll be in good position for a. And I can't connect those two without crossing. One of the rules of making trend lines, don't want to cross through wicks, don't want to cross through bodies of candles. Okay. So there we go. And we have a Harami at the, kind of like a shooting star, it's indecision. And last time we had that kind of indecision price, the decision candle broke the high of the doji and broke out. So we have a doji here. And so we could break 68.01, then we could see a big move back up to even the 76.16. So we're talking about like 900 pips on the monthly chart, moving down to a weekly, and you can see that the rate of change has slowed, and we have a reversal, a color change reversal there, and we are heading on up on a weekly chart with a higher low. And 70, 71, 67 would be a more conservative target. Here's our daily, walking down to the daily again. We've got stacking green candles, below the 200, but we broke a downward trend line on the daily. We broke it handily, and now we're making new highs. So from support. So bulls versus bears, I am bullish Aussie dollar. And very bullish. I'm looking for a move. 70.28 maybe. I mean, if you could take a fib off this and just take, I maybe a more conservative target, and we'd be 67.93, and that's like 70 pips from now. But maybe even higher, maybe even up to 70.53. This is kind of the area here where we would want to, if you were a position trader or swing trader and you wanted to hold it for days on end, this would be a nice little basing area where, you know, currencies do trend. I am a scalper. I'm like saying if we broke a channel, we're creating a new channel right now. We're in the middle of just starting a new channel. And so, you know, can't really get on that. Maybe you can do this. We can come a little bit like that. There you go. There we go. And then we can go into this. Let me zoom in on that. See, there you go. So now we've got the channel, and then we can look for move back up to the top of the channel. And if we are at this kind of an angle here, we're looking maybe like 68.91. Look at nice takeoff right there, going on right now, right? You know, this has dropped on down to like a 5-minute chart. See what's going on. It's like, ooh, like nice gap breakout, and then come on up. Okay, come on up. All right, I'm gonna do New Zealand dollar just a little bit because you know, if you want some choices, starting from our monthly and walking it down, I'm walking down real quickly there, and I'm going to remove drawings, and we can see, look at this, nice. This is, I like this because the double bottom is very clear, and like I said, I don't want to go through wicks, but that's, you know, that's very nice. And then the target is the top of the double bottom with a W, right? And that would take us to a 74.67, pretty clean. Bulls versus bears, I am bullish, you know, and I would even say, well, how about a stop there, right? Again, these are not recommendations of any kind. This is for purely for educational purposes only. Make your own decisions and do your own homework. And past performance is not an indication of future results. And yeah, I have had 408 trades in a row without a loss, but that doesn't mean my next trade will not be a loss, right? There you go. I mean, if I would have to stop like that, but maybe like we did like that, well, that's a risk and that's a reward. And all day long, I will take trades like that. Right. Right. And basically, because you know why? Because we have Chinese data coming out. In fact, the data may be coming out very, very shortly. 21:51, I think, is the time to get back to our calendar. Oh, it was taking so long to load. 21:15. So in about 5, 10, 15, 20, 25, 30 minutes. Okay, so we'll keep going. If we're still on the air, they'll take a quick gander at that. I mean, I could fire a trade off on that, right? Boom. Okay. We'll come back and check. We'll check on our long trade. Okay. Okay, we went long at market. Let's go ahead and go to walking down the weekly chart. Bulls versus bears, I'm bullish. You know, we have our trend line, rising trend line, higher highs and higher lows, and that's very cool, right? Nice little pullback there. Look for a push higher, and that's really cool. Okay, so anyway, we can walk it down to a daily, and we can see similar. We had a nice correction, a nice 3-wave correction against the trend. It was like a 5-wave correction against trend. 1, 2, 3, 4, 5, right? And now we're going back up. You know, we got back to 65.32. That's like 300 pips from where we are right now. That's a very nice risk reward right there. And I'm saying, as a scalper, I be in and out of this trade numerous times here, right? Don't know what's going on here. I don't know why I'm not seeing my trade show position and profits and losses. Click OK, right? All right, so I'm down a little bit. Okay, we'll come back. Okay, let's go ahead. We do have lots of pound data, or actually, let's go to the euro. The euro is the anti-dollar. I always go to the euro secondly. But anyway, let's go ahead and here we go. And this thing exploded to the north side. And Asaki sent me this chart that she was looking at because she was asking me about the euro, and I said, you know, we probably see you know, like I said, there's some big springtime cycles going on right now, and the springtime cycles tie in with moon phases and all kinds of stuff, a lot of advanced stuff. But I told her, I said, I said, the euro would go higher, and then she says, and then right, I mean, and Asaki is like one of my, I actually went to Hawaii to actually to train her and her husband, and I was not cheap, but it was a really nice trip. But she was talking to me about I'll be watching the euro, and I said, well, okay, that sounds very bullish. And I pulled up, there's a moon sign and a moon cycle indicator in Trader's View, and I actually showed that. I said we could go, we go up to we could go higher, right? We could go higher from there. And then she says, boom, and she says, wow, you just said it. I said, when we have the predictive function, we use a predictive indicator, allows us to get in the market 4 and 5 bars ahead of everybody else. So we had this already plotted out, and I wanted to get on air and tell you guys about it before it actually happened. But 423, I said it sounded bullish, and then boom, we had a breakout at right at 423 or 420, like 425 or so. Let's see what time that breakout occurred. But it was like within, well, I heard the clock's in Hawaii time, 5-hour time difference, right? UTC minus 10. But that was the breakout right there. Pretty cool. But I mean, it's routine what happens when we work like that. When we were able to look at the market in a different way, and we're able to chart the market and see these different cycles and things like that. And it's a powerful thing. I'm going to be teaching you all about that in Las Vegas. You can't afford to miss it. There's not going to be a lot of hype and selling you stuff and waving shiny little objects and little programs. Guys, this stuff is deep, very deep. Okay, and it goes back hundreds of years, not just the last 10 or 20 years. So your little green light that flashes when this goes off is not going to read what's going on in the market. The banks don't even use charts, guys, because they control the market. If one guy can press a button and it's one bank and wipe out 8% of the European stock market, what do you think they need charts for? That's just something I'm going to be talking about at the Las Vegas Mastermind. I'm going to be able to, it's been 5 years, so I can say whatever I want to say now. I signed something 5 years ago. I don't have to hold back anymore. And I've chosen Las Vegas to reveal it. So make sure you get your ticket to Las Vegas. And if you can't make it there in person, the next best thing is get a streaming ticket. Get yourself a streaming ticket. That way you can at least see what's going on and get the recordings of it. And these recordings are going to change your life. They're going to change your trading. People say, well, next time you do one, let me know. Bro, do you think I need to do one of these? I'm doing it for you. And if you can't show up, I'm not, that's it. I'm not necessarily want to do this again. I mean, it might be a lot of fun. I might do it again, but it will, the price will be astronomical next time. This is the meatballs at Costco kind of thing, okay? And the meatballs are gonna, cost, an event like this normally costs $25,000, and I really wanted to sell it for $25,000, but my team said, bro, get out of it. We're in a recession. Think about other people. Stop being so selfish. Offer it for $49.97. Give your tribe at least $1,000 off of that too. I go, really? And I go, okay. So I did. So that's it. So you say, oh yeah, next time, if there's a next time, it won't be less than 25,000. So I'm giving you the very best mansion, dinner, lunch, breakfast, hypnotherapy, yoga. We're going to have all kinds of activities. We're going to have trainings. We're going to have, handouts. We're going to have checklists. We're going to do all kinds of deep mindset affirmations, total transformation for $49.97. Come on now. You got stuff you bought for $49.97 that is not that deep, right? So anyway, I'll look forward to seeing you there, and let's go ahead and continue. This is the anti-dollar, the euro. But the anti-dollar has been from the high of 160, it's been a downtrend from the past, what is that? 13 years, 14, 15 years, lower highs and lower lows, lower highs and lower lows. It had some bouts, it had some trends, right? But now we got a low about 95.23 back in September, and we've been rallying from there. And we're rallying in a very specific pattern. I'm going to be discussing that pattern. And you just need to get above this 110 area, but this is a Harami bearish candle. The mama bear giving birth to a baby bull. Harami means skin on belly. And this is, it's kind of a shades of gray, kind of a, big red candle with a small body. And people think, oh, see how big that red candle is? It's bearish. No, it's not. In candlesticks. Now, we had one back here. You said, well, Greg, there's one back here. And it's not always. What you want to look at is the pattern in relation to significant levels of support and resistance. You're going to be talking about that too. And see, we're at the 38% retracement with this Harami. That's going to have a lot more sway than a Harami in the middle of a downtrending market, right? We're actually having a pullback against the trend and a drop, and that drop got stopped by this Harami. And so we were looking for price to rise from this area and go higher. It's just like it's the US dollar flipped upside down. To confirm this, we need a break above 110.52, but by the time it breaks that, you're a dinosaur, right? A break above 107.60 would be nice. Again, this is a monthly chart, and that's like 100 or 90 something pips away. Let's go down to weekly and see, now you got something you can sink your teeth into. You got this old high right here. You say, well, Greg, the 200 is sitting right there, and every time this thing hits the 200, it's dropped. Tag, you're it. But we have a little inverted head and shoulders pattern here. That, we're pattern recognition creatures. And, that means we can tell the tiger and leopard, we can see the spots, and then we learn not to get eaten. And if you couldn't see the patterns, well, guess what? You got eaten. Try, oh, look at kitty cat. Oh, you got eaten, right? Well, a lot of traders can't recognize patterns and they get their account eaten. But that's a nice pattern. And, with the inverted head and shoulders, we have a, price projection off the neckline. Neckline was somewhere in there. And then we were to clone it like a sheep. Really? Clone. And then take that line and then add it there. So we get, oh man, we got a massive move to the upside. Right? Well, everyone is probably very bearish this pair. And that's where trades are made. We want to trade when everyone's on one side of the trade, because they have all their stops are located up in here. They have think of stops like barrels full of gasoline and kerosene, and the price is like a match. As price moves up to that match, that fuse comes up to this pile of gasoline that's above here. What we'll see is a big explosion in the upside, and that'll give you your, oh, look, a bullish engulfing candle. I think I'm going to buy. Well, it's too late. Okay. I mean, you're late to the party. This is where you want to get in when no one wants to get in. And then you want to take profit when everybody's like so excited, right? But there's your stops. All the stops are sitting right there. And why? Because the gurus tell you, hey, I tell my students too, put your stop 4 or 5 pips above the swing high. 4 or 5 pips in this zone, there are all kinds of buy orders stuck in here, right? I don't need special software to tell me that. I can look at a chart and see that there are orders there, right? There are orders, tons of orders here, orders there. And when those things get hit, price, and there are a massive amounts at the 122 area, right? There's a massive amount of orders. If I can get this up here, above here, because that was a double top, and there's lots of, that's the magnet where it's going to draw price there, right? And when it gets there, hits that, then it's open space. All this open space gets filled, right? So right in here, we break that area, boom. I mean, we got a long way to get there. But and then I would say, look, if we stay above 105, we're good, right? Because we have a higher highs and higher lows. This is a weekly. Let's go down a daily. No, we don't, and then we can see support. Now, what you want to do is you want to walk your way, walk down from the higher time frame. Don't walk up, walk down. Daily, look at that, all that support right in there, right? So there's buyers stepping up right in there. So that's going to provide support. And then we've got all that liquidity up there that's looking to get targeted. And that's a pretty good little move from 106.85 to 110. You're talking about 320 pips or so, right? So let's walk it down. And we can take it. You're not going to eat the whole elephant at one time. You might eat it at 20 pips at a time. Eat 20, it pulls back and wait and grab some more, and then it pulls back and you grab some more, But you can do it that way. As long as I'll set targets, I know, yeah, this is the final target, but I might get in and out 15 or 20 times, maybe 100 times between here and there. Right? I'm just not gonna like set one trade and toast in there. If I'm busy, I have other things to do, but who has other things to do other than make money? If you do, you're just too busy, right? You're just too darn busy. I'm sorry, I'm too busy to make money, Greg. Oh, that's good. I'm not. Give me yours. Okay, here we go. I mean, that's like a gap, continuation gap. Because Forex prices are different than commodities and the stock market, where every spot on the chart is a buyer and a seller. It is an agreement between a buyer and a seller, a buyer and a seller, a buyer and a seller. Each price point on a futures chart, on a commodities chart, on a stock chart, because we have a centralized exchange that records the buyers and sellers. However, Forex is a decentralized market, and so there is no record of buyers and sellers as publicly shared in a ledger, a public ledger, right? The banks are not going to tell you who they're selling to at what price, because that's how they are. So what we say is the charts are indicative pricing. That way, so when you're trading on the brokerage in a Forex broker, and you press the button and all of a sudden it says the price not found, or your order doesn't get filled. Maybe there's no one there that's taking the price, but they take a crayon and color it in, just so that maybe it could have been a price at the airport that was made, a price on a credit card, a price on a ledger, import-export ledger, something, right? So other things were actually, they said we probably didn't have that price in-house, but that price was hit somewhere. And so that's why you see slippage and things like that at your broker. And they could be just ripping you off too. I'm just that's the other argument. Bulls versus bears. I'm bullish the euro dollar. Okay, I'm keeping it spicy, keeping it moving. We already looked at Aussie dollar, we looked at euro, New Zealand dollar, and basically I'm saying the same thing, right? I'm basically short dollar, right? So, but now it's like, well, look, what else is traded against the US dollar? Oh, how about Bitcoin, BTC, USD? I haven't even looked at the chart. I don't normally trade it, but I would be I'm already telling you I'm bullish. Just because the dollar is weak, then anything against the dollar is going to be weak as well, right? Oh, look at that. Did I call it? Yeah. And look, I took our break to the south side and then moved north side break. We're at 27.18. And I mean, I've been calling that for a while for the break. And I was actually looking for a bigger move to the south side, but you know, we got down here instead, right? And completed it. And it probably completed a Fibonacci. It looks like it completed a Fibonacci down move. And I'll show you how clever this is. Like I said, I don't trade this, but I have friends, students that do. And look, boom, there you go. Oh, snap, 1.618, 1978. So if you had these 2 points, you had the target. And if you bought the target, boom, you didn't go to Walmart, you lock it. Boom, boom, boom. Right? Why? Because it's a US dollar, right? So, okay, where does it go from there? Right? Oh, let me back it up. Let me clamp my toys, move all drawings. Okay. And you can see that we have, if we look at way back when and took our fibs from the lows of, who knows, 50 cents. Who would like to get Bitcoin at 50 cents again, right? 786, almost there, right? Next elevator pushes to 3482, 34,829. Yep, Bitcoin, good job, guys. You held on to it. You hodlers held on to it. Hopefully you stacked into it. I know I have some friends from New Zealand, Jan and the gang. I know they were stacking Bitcoin, and they asked me. That's another thing of having a mentor. When you ask your mentor for advice or support. Greg, can you analyze this? I go, sure. And then I pop it in there, right? I would do it for you guys too, but you guys don't talk to me in the chat box or the comment section below in YouTube. This is my guy Almir. He's a funded trader. He's part of the funded trader program, and he's already made money. He's got his live accounts that they gave him money, and he's making money in it, which is really cool. And so it's really cool to have traders going through. Yeah, we have the Las Vegas Mastermind, but I'm trying to see where my Bitcoin, my BTC guys are. Bitcoin. I mean, it was a while ago they asked me about that. Yeah. Bitcoin decouples from $1, and I put that February 2019, and I was basically I was telling him, hey, our Bitcoin is heading to the moon. And anyway, winner. Okay, so good job there. Okay, so what else? How about the SPX 500? Right, a lot of people are saying, oh, the stock market's going down. Well, here we go. There's the monthly. Monthly's not too good because February sucked. And we had the making of an evening star pattern, but look, buyers stepped in. This thing went into indecision for the monthly. Go to a weekly chart, and we can see that we got a little, like the part of a half of a morning star. We have a bearish candle, spinning top, and we can break the high of 39.78. This thing goes gangbusters. But also, you can see the inverted head and shoulders forming there as well. Where? I can't see. Pretty sneaky, sis. Where? Diagonally. There we go. There we go. All right. Still, we don't need, I mean, if you need confirmation, right? But I wouldn't, if you're bearish, if you're a bear, I wouldn't stay bearish. This looks like it wants to blow up north. Right? Because why? Because we're making higher lows, even though we're making lower highs, but the higher lows are coming up into this thing. Once they breaks into here, we can look for a break, and then we can see a retest of the old high, right? In fact, I need to remember to get into the S&P index, Greg. And I'm so busy with Forex that I don't look at my TD Ameritrade account. Let me go ahead and pop into the NAS. I'll use NAS heads out there. NAS heads, rock on, dude. NAS heads, NAS 100. I'm gonna look at CFD though. And this thing is going to go nuts. Look at this. Look at this inverted head and shoulders. This thing, I spotted one before. This is the monthly, right? Look at that, bouncing off the 50% retracement. This thing is like basing. Boom. Yeah, it is. Yeah, maybe I get me on. I'm gonna get some of this NAS. Yeah, you get the NAS. This is game over, guys. You do this and you're good. But this is a head. It must be a 4-hour head and shoulders. I must have drew that a while ago. Yeah. Now, I mean, we still stayed above the lows, but this is complex pullback, expansion pullback, right? Okay, I'm gonna remove all my drawings. Remove all drawings, start from scratch, and let's start walking down. Okay, so this is our, yeah, we're coming. Look at this, guys. This is the bottom. You gotta love this. We broke a downward trend line, broke it strongly, you know, and then we're just getting started, just leaving the station here, right? So what's part of the NAS 100? You know, you want to look at, like, how about AMZN, right? What are the stocks in the NAS? You know, like, this is getting ready to get started. 98, right? Why? Because they laid off everybody, right? So they've got, so look, lots of support there. Take out 114. Yeah, well, let's look at Google or Alphabet. The NASDAQ, look at that. All this stuff is cooking, baby. Right at support, the 90. Nice. We have a breakdown, break the trend line. I mean, this is like free money. Free money. You need to share this. You need to like, thumbs up, share, because you are not getting the truth like this anywhere else on the market. I've been doing this for 27 years, people. And this happens every year. So if you're new to trading, you're new to this, you know, this stuff is in cycles. But when you get into May, you watch out, right? Because, you know, we rise, we're going to rally, make some good money. And then you're going to, you're going to get all excited. And then you're going to keep playing this game, and then you're going to give it all back because you don't know when to stop. And that's the biggest problem that people have. They don't know when to stop. And so you want to know when to stop. This stop. Okay. 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 Oh, just want to make sure that I was recording. Now, this is some good information here. I just want to make sure this was recording. Okay. I'll get back. You guys, if you guys like it, I mean, this is, come on, baby. Jump on that Google. I know a lot of guys, we circulate a lot of money in advertising for Google. And that advertising budget, every company buys YouTube ads. This is YouTube ads right there. And as they get more earnings, price over earnings, PE ratio, right? We go Tesla, TSLA. I haven't really gone into stocks, but yeah, okay, here we go. You missed, right? Trend line break, daily chart, higher. We have this rally off of support, an inverted head and shoulders here as well. And we're gonna look at break. You get a break above 221. This thing goes back to 404. It's really a really nice time to be in the markets, guys. Springtime, vernal equinox, and all that good stuff, right? I'm going to get off right now. I think we've did we cover? I mean, we could cover gold, XAUUSD. And it's gold's an interesting animal. It broke out, yeah. We broke out. Remove all drawings. Yeah. We had a really nice, here's our monthly chart on that. Big engulfing, look at that. up, pull back, and then engulfing. This engulf that like in your face. 1968 biases, because why? It's gold versus USD. People are selling off gold, selling off dollars, and going into gold. We have a budget crisis facing, the U.S. if they don't agree to a budget, which happens around this time too. And if the U.S. government goes bankrupt, they don't have any money. Well, then that's going to maybe affect the credit rating for the U.S. And that could make people run away from the U.S. dollar as safe haven. I mean, they always run away for a bit, right? And I'm looking for maybe a pushback up to 29 on silver. Bulls versus bears. I'm bullish gold and silver. And I'm really, really super, 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 super bullish about one particular asset class. So super bullish that, it's generational wealth changing. And I will reveal that in Las Vegas, right? So whatever I reveal in Vegas won't stay in Vegas, but will go home with you. So if you are, if you can't make it live, and I remember, my first live Forex event, I spent $7,000 for. I think we had some sandwiches, and I fell asleep because I was bored. I was bored, and all I got was this janky notebook. Did I show you guys my notebook? I got back my 1998 notebook. I still have it. You believe I still have it? This is the notebook I got. 7,000. This is 7,000. It's probably in 1996 dollars. This is probably $20,000, right? And it was super thick, and it had these like, I mean, it's just pages and pages of like, I don't know what. I don't think and they said you have to read it 5 times. It's like, not. And I wound up losing money the first time I used it. That won't be the case for the Las Vegas Forex Mastermind. In fact, prices are going to go up. We have just a few seats left, and I say, look, guys, we've sold them for $5,000, and we've got some early action bonuses, but these last seats are going to need to go. They need to go for like 25,000. We got to have a couple of seats, So you want to get the cheap seats, which are really all the same. You're going to be sitting in the same place. There's no, except for the guys who got the VIP, they're going to be staying in the mansion with me. Like, amen. So we've got some of our VIPs that are going to be spending the night. And we're going to be trading at night, doing London session. We're going to be midnight, between 11 p.m. and 1 a.m. So we're all going to put our our PJs and pull up maybe pull up fire pit and sit around with our laptops and Wi-Fi and trade the markets, trade the London market together. You imagine the trade London market, always doing it by yourself. It's dark, your spouse is asleep, but imagine having a house full of friends trading the London session with you. That's going to be a pretty, and having yours truly there too. I think we might make some money there. You think we might make some money there, right? So if you're interested, take a step forward. Join me at the Las Vegas Mastermind. I'd love to see you there. And right now the current price for $4,997. It's going to be increasing to $5,997. I told them $25,997. Okay, we need to fix this. Anyway, hurry up and get your ticket before I get mad at somebody. So you better grab your ticket. If you grab it before I change it, you got it. But don't ask for that price after it, because I'm definitely gonna talk to Andrew about this. Okay, and actually we're gonna have our hypnotist John Ways, who's a famous hypnosis famous to athletes and to performers. Any high performance individual wants to get control of their mind, to, like, you know, a lot of times you guys know what to do with the trading, you just make stupid mistakes. You got all kinds of pressures and things that, you know, you can't in your brain. So I actually requested John Ways to come and speak, and actually, you know, if anyone's interested, you know, they can participate. It's not required. We're not hypnotizing the whole crowd. But if you would like to, you know, have you, you know, get in touch with your subconscious mind and master your mind and say, look, you know, losing is not what I want to do. All right. So my subconscious mind support me, and, you know, boom, this is, you know, so he's going to be there. I'm going to give you a little clip of what he's going to be doing there at the Forex Mastermind. Little entertainment and little mind change too. Watch this.
Very professional. He did everything to John it was the best party ever, and we did someone.
Yeah, he's going to be there, guys. It's going to be fantastic. And I look forward to having you there. I mean, we are, this is our, I'll show you our Airbnb that we're going to be at. Beautiful 8-bedroom that we're going to be looking at being, you know, we're going to spend 3 days here. You know, we got a pool, we have a jacuzzi. There's plenty of space to stretch out your laptop with Wi-Fi. I'm going to be presenting in the front, and it's going to be these luxury accommodations with a pool table, kitchens, gonna be catered meals, catered breakfast, catered lunch, dinner at a fabulous 5-star Brazilian restaurant. This top-notch elite facilities for elite traders, and that's what you are, and that's we provide you with nothing but the best intimate setting, plenty of room to stretch out, and you can become part of this too. Be part of this experience. Transform your trading, transform your life. Don't miss it. Be there. All right, this is Greg McLeod signing up. Peace and pips. Cheers. Talk to you later. Bye-bye.
you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!